Most welcome to Just Tutor Academy, and today we are going to study about accounting equations. First and foremost, accounting equation falls under financial accounting, a course mainly at the university, and it has a principle that states what the business owns is equal to what the business owes. And in this we mean the assets of the business equal to the liabilities and the equity of the business. And another principle to note about the accounting equation, that it always balances. Every step balances. From the first transaction to the last transaction, it should always balance. And at the end of the accounting equations, there should be a balance sheet formed, showing that all the transactions balance. And the formula for the accounting equation goes as assets equal to liabilities plus equity. This is what I talked about earlier. Assets are what the business owns, equal to liabilities and equity. And we are going to list the assets, the liabilities, and the equity. First and foremost, the assets are cash, debtors, stock / inventory, investments, prepayments, and goodwill. And for the liabilities, we have creditors, the people who demand us, loans, wages, and taxes. Lastly, under the equity side, we have the owner, the money that the owner puts into the business. That is also equity. We can also call it capital. Then the shareholders or stockholders, they also contribute to capital. Then we also have retained earnings. This is money set aside for business purposes, part of the profits for business purposes. Now, what the accounting equation is all about, the side of the assets where we have cash, debtors, stock, investments, and repayments, should be equal to liabilities, all combined with the equity. They should balance. And an example is when you have cash of 5,000 shillings cash, and on this cash it's the money you start with for the business. For example, you are running a popcorn making business and your capital is 5,000 to buy all the stuff. Then this 5,000 is equal to capital. That 5,000 is capital on the equity side. So they are balancing. We have cash, which is an asset. We have the cash, it is tangible, that asset, which of 5,000, which is equal to the equity of 5,000, and that 5,000 is capital, though you have it as an asset, but it's the one which is starting the business. Now, when, for example, you make a budget and you say, I'm going to buy popcorns for 2,000, those cones for 2,000, and also buy cooking oil for 3,000. That will be, for that we consider it to be inventory. Those cones are inventory. That will be 2,000 for the cones. However, when you use the cash, the 2,000 from the cash, it will reduce, and here we shall have 3,000 as the new cash at hand. So making it, let's draw here a line, and we shall say we remain with cash of 3,000. So this stock has reduced our cash. We have used the cash to buy stock. That's why we have reduced the cash amount from 5,000 to 3,000. However, when you add the total assets, you still see that they are equal to the capital of 5,000. We shall see it in the next video, where I will bring in the example showing how we calculate the accounting equations. However, I'm giving you the basics to know the concept on how the accounting equation moves on. So, and in case someone borrows you money, let's say you have got a loan from the bank, we shall say cash at bank, you have got 10,000 from the bank. Yes, that is an asset. Remember we said cash, and cash has two parts, cash at bank and cash at hand. So when you get a loan of 10,000, yes, you have increased on your cash at bank. However, your cash still remains 3,000, the cash at hand. Then your stock also remains 2,000. However, the bank loan is a liability. This bank loan is a liability. So we shall write it under liabilities as bank loan 10,000. Yes, and then under capital we still have our we have our 5k. So the accounting equation states assets equal to liabilities plus equity. So when you add these assets, they will be equal to the liabilities plus the equity. So let's add them up. 10,000 plus 3,000 plus 2,000, it will be 15,000. It will be equal to the 15,000 on the right hand side. So this shows that these accounting equations should balance at all times. When you reduce the cash and buy stock, you reduce the cash and increase the amount on the stock side. When you borrow something, you do the same. You add the money to the cash or the bank, then you record it under liabilities. When you have a drawing, for instance, let me first also indicate the drawings. When you have a drawing, now your business is having 50,000 in the previous transactions, and you withdraw money for business, for personal use. Let's say you had a drawing of 1,000. Now that drawing, you do not record it on the asset side. However, you subtract the money from where you got it from. They can tell you that you withdrew 1,000 from the bank for personal use. So you will come on the bank and say, bank, we have 9,000. Yes, you don't record the drawing, you just write 9,000. You continue with the other recordings, 3,000. Then also our stock, you say 2,000. Then on the liability side, on what the business owes, you will come and say bank loan of 10,000. Then under equity, because the drawings affect capital, so it's where you record your drawings of 1k, but in brackets. Why do we record them in brackets? It's because drawings reduce on our capital, on our equity. So we have to subtract it from the capital because it has reduced our capital. That's how we go with the accounting equation. To know more about the example, I will post it like on Friday, where we shall see the example on how to apply the accounting equation in the question and how it runs. We shall also see how the expenses are also calculated. We shall see how the liabilities, the assets are also handled. So stick up to the subscribe to be able to find the next video on the examples about accounting equations. Thank you.